What's happening, people? Good morning, Europe, and welcome everyone to our live stream. We are broadcasting live on Facebook, YouTube, and Twitch TV in an effort of bringing the financial markets to your doorstep and help each and every one of you make informed decisions about investments and the amazing CFDs markets. The episode today is proudly sponsored by our partners at Forex and Markets.com. And if you like what you see, guys, please feel free to like, share, and subscribe and support us in delivering more great content. Feel free to type your comments and interact with me during these broadcasts, and I will do my best to answer every question you have. Welcome to the European trading session, everyone. Here's what's happening in the markets today. Europe is under more pressure as COVID-19 cases grow, forcing more countries to implement lockdown measures in an effort of stopping the spread of the virus. Europe's daily COVID cases have doubled in the space of 10 days and crossed 220,000 for the first time on Thursday, with many countries setting new records. Italy will shut down its cinemas, pools, theaters, and gyms from today, with bars, restaurants, and coffee shops to cease table service by 6 p.m. Belgium will close all bars and restaurants for 4 weeks from today after recording one of the world's highest fatality rates per capita. Ireland has moved to its highest level of COVID restrictions, similar to those brought in during the spring. In the UK, South Yorkshire has moved into stricter Tier 3 measures, and Wales has entered 2 weeks lockdown. More countries in Europe have already implemented measures. For example, Croatia and Greece have made masks compulsory in all public indoor spaces. Czech Republic also closed the schools and bars, and the Polish president Andrzej Duda has tested positive after infections double in less than 3 weeks. This is what is happening in Europe, guys. Once again, very good morning, everyone. Also across the pond, guys, the US has also recorded its highest ever number of COVID-19 cases for 2 consecutive days, and they are looking to implement harder measures as well. Most assets traded in red on the Asian trading session overnight, with crude oil. Bear with me for a second. With crude oil trading as low as 38.74 per barrel, the euro and the pound created lower lows as well, and gold price pushed below the 1900 level for the first time in 1 week. To top it up even more, retail traders took a hit on Friday when the Australian Securities and Investments Commission, also known as the ASIC, has officially announced restrictions on selling contracts for difference to retail clients, saying it was still concerned about investor protection. The rules also mandate negative account protection, ensuring that customers cannot lose more than their trading stake, avoiding a repeat of the debate following the 2015 Swiss franc collapse. Finally, the rules forbid bonuses and other incentives, whether monetary or non-monetary, that may have encouraged overtrading in recent years. For brokers, the biggest blow has been ASIC's decision to limit how much leverage they can offer to their retail clients to juice up the bets, for example. Regulated firms have been forced to limit the leverage they offer to a maximum of 30-1, bringing them in line with UK and other European countries. What does this mean for retail trading, guys? What does this mean for retail brokerages? João Monteiro will tell us more in the next few minutes, guys. Live with us in a few minutes, we're gonna have João Monteiro, founder and CEO at Forex, in a lovely Skype interview, and he will tell us more, and he will answer any questions we have. But before that, let's have a quick look and see how the markets open today, guys. 26th of October 2020. We are looking at crude oil futures, guys, which are currently trading at 38.48, which have dropped drastically on Friday on the US trading session and on the Asian trading session a few hours ago. We're looking at the RSI and the stochastic way in the oversold levels, and oil price might target the $37 level. Yeah, the 36.97. We're just short of the $37 mark, as that is the previous low on a 60-minute time frame. Moving on, we're looking at the euro, guys, which is currently trading at 118.33. Also suffering a bit of a drop on the Asian trading session on worries that the COVID pandemic cannot stop yet in Europe. We're looking at the pound, guys, which also lost quite a few of its gains last week. Currently trading at 130.05. Okay, just close to the 130 flat level. Again, on COVID pressure as well as the Brexit pressure that will happen on the 31st of December this year. Moving on to the USD JPY, we see the USD JPY traded in a range on the last couple of trading sessions, with the US dollar trading at 104.88 versus the Japanese yen. The Aussie dollar again lost a bit on the Asian trading session as well as gold. Yeah, currently trading at 0.7114 on the back of a fairly strong dollar, I'd say. The USD Canadian pair again is trading slightly higher at 131.73. Okay, we see a potential negative opening for the US dollar this morning. Yeah, we see a red candlestick opening. If we're going to have a bit of selling power on the US dollar today, guys, very likely the markets will start ranging, yes, sending the USD Canadian pair in a range between these two levels. Okay, alternatively, we might see the US dollar settling higher, yeah, above the resistance level, which we see at 131.79 as things stand right now. Yeah, with potential for the upside towards the 132.38. But again, it's Monday morning. We're only 8 minutes into the European trading session. We need to allow the markets a good few hours to calm down, and obviously allow the US markets opening later on today, just after 4 o'clock GMT +3. Moving on to the US dollar index, we see it dropping on the US trading session on Friday, and advancing a bit on the Asian trading session earlier on, currently trading at 92.95. Again, we see a potential negative opening for the US dollar index today, with a red candlestick pushing lower and lower. I'll try and decrease the time frame, guys, to a 15-minute chart, or even to a 5-minute chart, in hopes for a clear indication. And we can see a red candlestick. We can see the RSI and the stochastic, guys, apparently pointing downwards. Okay, we might see a drop in the US dollar today up to the 92.72 level, which is the closing level it had on Friday afternoon. Remember, guys, many times, or most of the times, the gaps will be filled. Okay, so there is potential for the downside for the US dollar to the 92.72 today, to close in the gap it left on Friday. Alternatively, we might see the US dollar pushing higher towards the 93.11 mark. Okay, it all has to do with the events that we're going to have in the economic calendar today. We're going to have the new home sales, yeah, for September, to be announced at 5 o'clock GMT +3. Okay, so let's see how that will affect the US dollar. We're moving on to gold, guys, which is currently trading at $1,902. Okay, we see a positive opening on the US markets, on the European markets today, guys, with gold pushing slightly higher. Yeah, a few minutes ago, about 20-30 minutes ago, before the European opening, we saw gold trading lower. It was trading at just below the 1900 level. Yeah, it was trading at 1897, 1898. Yeah, just $1 short of the 1900 level. After the European opening, we see it pushing a bit higher, yeah, to 1903. Okay, if that's the case, then many traders will probably eye for the 1914 level. They will try and catch about 10 pips. Yeah, very, very short-term movement. And if we switch the time frames to a 1-hour chart, okay, we might see gold today pushing even higher, towards the 1921. Let's remember, guys, that gold had the incredible ability of gaining over $200, okay, in very, very little time last week. So a bit of a push, who knows? Might push gold higher. $20 for gold is nothing. We saw gold giving back or gaining way more than that in a very short time. So as things stand right now, guys, all eyes are on the 1913 level, which is the previous high. Okay, and in case gold decides to trade lower today, then probably all eyes will be on the 1891, okay, 1892 level, which is the previous low. Right, we're looking at the Bitcoin right now, trading just above the $13,000 mark. Incredible rally for the Bitcoin last week. It was the absolute star, closing the week with over $1,000 gain. Okay, and trading acting more or less like a safe haven. Okay, we saw that with the world markets under tremendous pressure. Bitcoin tends to do really, really well in times like this, and again, starting to look more and more like a safe haven. Now, we have João Monteiro in 2 minutes. He's going to join the conversation, guys, regarding the Australian Security and Exchange Commission officially adopting curbs on selling CFDs to retail investors on Friday, and announcing that regulated firms are forced to limit the leverage they offer to a maximum of 30 to 1, down to as little as. Quick intro into the article. The Australian Securities and Investments Commission has officially announced restrictions on selling contracts for difference to retail clients, saying it was still concerned about investor protection. The rules also mandate negative account protection, ensuring that customers cannot lose more than their trading stake, avoiding a repeat of the I cannot pronounce the word, guys. Following 2015 Swiss franc collapse. Finally, the rules forbid bonuses and other incentives, whether monetary or non-monetary, that might have encouraged overtrading in recent years. For brokers, the biggest blow has been ASIC's decision to limit how much leverage they can offer to their clients to juice up bets. Regulated firms have been forced to limit the leverage they offer to a maximum of 30 to 1. Just like ESMA, just like European countries, just like UK. Specifically, the decision includes the following leverage limits, which vary according to the volatility of each asset class. 30 to 1 for major currency pairs, 20 to 1 for non-major currency pairs, gold and major indices, only 10 to 1 for commodities other than gold and non-major equity indices, 5 to 1 for individual equities in other reference values, or 2 to 1 for cryptocurrencies. Guys, leverage of 2 to 1 on cryptocurrencies is very easy to understand. Basically, if Bitcoin is currently trading at $13,000, you will need $6,500, to open a buy or sell position on one Bitcoin, on a trading platform. Okay, versus a leverage of 5 to 1, which they had till Friday, which meant you were supposed to invest 5 times less to open a buy or sell position on CFDs, on cryptocurrencies. Last year, the ASIC released its report regarding the new product intervention measures coming down hard on binary options and CFDs. The power, which was legislated in April last year, allows ASIC to intervene when it deems that a financial or credit product will cause significant consumer harm. Okay, so this is what is happening with the financial markets, guys. We are coming back live in 30 seconds with João Monteiro, founder and CEO at Forexy. Stay tuned. And we are back, guys, live with João Monteiro, founder and CEO at Forexy. Good morning, João Monteiro. How you doing? How is Forexy doing this morning?
Very well, thank you. Monday morning, always great to start the day with talking with you and talking to all people who are watching.
Is it great to start the day considering the latest announcements from ASIC that came on Friday?
Is always a good reason to live. I think the news that came regarding this ASIC decision for Forexy, I can be honest that it's a good measure for the offshore brokers.
Were you surprised by the ASIC's restriction that was announced on Friday? Did it take you by surprise? Because I saw your post on LinkedIn. You said you were expecting it, kind of.
Yes, no. As a matter of fact, and you know this, that we've been talking about this since August 2019. As a matter of fact, I think this was a decision that was already expected, at least from my end. This delayed a bit, I think, mostly in result of COVID, and obviously in Australia they also had their restrictions, and so this delayed a bit. But I was expecting this sooner or later to happen.
All right, for Australia to get lined up with ESMA, basically, and with the rest of Europe. Now, question: what does this mean for retail traders?
Basically the restrictions that are being implemented, that will be implemented from the 31st of March next year, will place all clients under the same leverage restrictions of ESMA and all the European brokers. As you know, in 2018, upon the implementation of these ESMA restrictions, most of the clients were looking for alternatives, and most of the European clients shifted their businesses to Australia, and they were trading with ASIC regulated brokers, exactly to benefit from this higher gearing. With these new restrictions, also with ASIC, retail clients, in order to benefit and to access higher leverage, they will need to sign up with an offshore brokerage or with an offshore branch of their existing broker.
Exactly. And so what does this mean for FX brokerages? Will they try and get an offshore license now to be able to provide their clients with higher leverage? Because now an average client that trades with $250 or $500 basically has slim to no chances of making good profits.
No. It's important the retail trader to understand that, especially those who have a smaller trading account, that will be practically impossible to trade normally or under normal trading conditions if you don't have higher leverage. This exactly because you don't have the margin requirements to open even a micro trade.
Exactly.
So it's important to find a broker that accommodates exactly this leverage, and this currently can only be done in the offshore. I think as most of the brokers, even SISEC, FCA, or even ASIC, already have their offshore branch.
Yep.
What is important is and in my opinion, this is a very interesting point, is that all the investment compensation funds, or even all the measures that are associated to a more reputable brokerage, this investment compensation funds applies to the European or the Australian entity. Even if a broker brings you or recommends an offshore license under the same name, you will have practically no protection whatsoever, unless there's an insurance or an investment compensation fund, the same way that Forexy offers up to 20,000 euros investment.
Exactly. That would be my next question. What makes Forexy different than other offshore regulated entities?
I think there are a few points that are important to mention. One is definitely the investment compensation fund that I was just mentioning, which we cover up to 20,000 euros claim if there's any disputes between the broker and the client. This is done by an independent entity called Financial Commission, and this is a very valid point. We started offshore and we specialize in the offshore business. So we are not an institution that found an offshore entity to accommodate the business that they are expecting to lose.
Yep.
We started from scratch with an offshore entity with a physical presence, office, and employees.
Yep.
We are audited. We have an external auditing by BDO, which is one of the most reputable audit firms. Adding to the investment compensation fund, adding to the higher leverage, ends up to be the perfect combination within the offshore stratosphere, let's say, to accommodate the business that you will not be able now to have under ASIC broker or FC broker. So it's this is the main point that I wanted to highlight, is the fact that to be offshore, you need also to give some to be transparent, most of all, but also to give some peace of mind to the client.
Exactly. So
because
Forexy, as things stands right now, it has audited trading. Yeah, your
yes,
trades are audited.
audited. Yes, audited balance sheet. Everything is in terms of the operational side of things. Everything is audited.
Perfect. You can
video.
give 400 to 1 leverage.
Correct. Yes.
And you have investor compensation fund.
Correct.
Right, which basically lines you up with any onshore regulated firm, because these are the 3 conditions for any onshore regulated firm: to be able to provide leverage, to have audited accounts, and to what was the other one? To be part of the investment compensation fund. Sorry.
Yes.
Right.
Yes.
So clients basically have nothing to be afraid of when it comes to trading with Forexy, for example, which is an offshore regulated brokerage.
Definitely, we are guided by the same principles. We have a very strong corporate governance and procedures in place. We are checked, and we provide reports weekly to our regulator. So offshore is no longer that banana republic that people might still think it is. And so it's important for the retail trader now to find solutions. And this is exactly where we want to provide is the solutions that from 31st of March, it will be harder for the retail investor to find under Australia.
I'm with you. Joe Monteiro, guys. Joe, thank you ever so much for being with us today. Looking forward to seeing you with another European markets opening, or why not the US markets opening in the next couple of days.
My pleasure. Thank you. And have a lovely
great day, Joe Monteiro. Thank you, guys. We had Joe Monteiro,
you
founder and CEO at Forexy, live, guys, regarding ASIC's decision of decreasing the leverage offered to its clients to a maximum of 30 to 1. Right, now let's move on, guys, and read a couple of interesting articles we had this morning. We see that European stock markets are seeing opening sharply lower today as surging COVID cases prompted more restrictive measures in the region, while the US remains unable to provide fresh catalysts as election day looms ever nearer. At 2:05 a.m. Eastern Time, the DAX 30 futures contract in Germany traded 1.7% lower. The CAC 40 futures in France dropped 1%, and the FTSE 100 futures contract in the UK fell 0.8%. Europe continues to be hit hard by the second wave of COVID-19 virus, with France reporting record new infections for the 4th consecutive day on Sunday. Italy also reported a jump in infections and has introduced the strongest virus restrictions since the end of a national lockdown in May, while Spain is set to impose a national curfew, having declared a national state of emergency at the weekend. The news in the US doesn't make for good reading either. The country recorded the most infections of the pandemic for the second day in a row, adding another 85,317 cases, including aides of Vice President Mike Pence. Pence himself continues to attend election campaign rallies, while White House Chief of Staff Mark Meadows told CNN that we aren't going to control the pandemic. Quick look at the economic calendar, guys, and see what is happening today, what is expected to happen in the markets today. In 32 minutes from now, we're going to have the German business expectations, okay, and the German current assessment, okay, along with the German IFO business climate, which will give us a bit of a hint on the strength of the euro, and the eurozone. Later on today at 5 o'clock GMT plus 3, half an hour after the U.S. market opening, we're going to have new home sales, guys, announced in the U.S. With a prediction, with a forecast of 2.8% versus a previous 4.8%. Okay, that was announced last month. Let's have a quick look and take some trading signals, guys, and let's see how investing.com sees the European currencies this morning. We see the euro stuck in a strong sell on 3 time frames versus the US dollar. Let's have a quick look at the charts, guys, and try and compare the signals. See if the markets manage to calm down. There you go. The euro is definitely pointing downwards as we as things stand right now, trading at 118.22. Okay, and potentially targeting for the 117.99 level, or why not lower? Yeah, we could even see it going lower today at 117.69. Okay, at least according to investing.com. We see the pound undecided this morning, buy position on a 5-minute chart and strong sell positions on 15 minutes and hourly. Usually the European currencies trade together, trade in the same direction. Okay, currently the pound is trading at 130.14. Okay, we see the RSI and the stochastic trading quite low. Okay, so there might be a bit of good news coming from UK, pushing the pound a bit higher, but it's still early to tell. No really movement has been recorded yet on the pound. Moving on, we're looking at the US dollar, guys. The USD CHF pair is stuck in a strong buy, at least on a 5-minute, 15-minute and hourly time frame. Okay, buy on the US dollar versus the JPY on a 5-minute time frame. Okay, USD Canadian again set in a strong buy. All right, and as we move downwards, we're looking at the euro set to decline versus the Japanese yen. Okay, at least this is the clearest trading signal we're getting as things stand right now. Okay, so we're looking at potential weaker European currencies, guys, and a potential stronger dollar today. Okay, again, looking at the US dollar index, guys, we see it pushing a bit higher, especially on the Asian session, it traded higher. Okay, so let's see, we might see the dollar pushing a bit higher today. Yeah, as I said earlier on, targeting either the 93.25 level or even higher at the 93.47. Okay. Very, very careful trading today, guys. It's only Monday. The markets just opened a half an hour ago, so you still have 4.5 trading days ahead of you. Okay, let's have a quick look at commodities, guys. Maybe we get a clear indication on what's going to happen with the US dollar today. We see gold and silver stuck in a strong sell on all 4 time frames. A lot of red on commodities this morning, guys. We're copper stuck in a strong sell on 3 time frames. Crude oil, WTI, as well as Brent oil, yes, strong sell on all 4 time frames. We see a bit of green. The only bit of green that we see on the charts among commodities this morning, guys, is the natural gas, which is stuck in a strong buy on all 4 time frames. So for commodities traders, there you go. This might be your opportunity as the trading signals are a bit clearer. Yeah, and for currency traders, guys, trade with caution today. And if anything, you might want to shift your attention to commodities or another asset that gives you a bit of a clear indication on the price direction for the day. Quick look at European indices, guys. We see again a lot of red on the charts. Well, it's expected with so many COVID cases and the COVID situation not improving in Europe whatsoever. Here we see the FTSE 100 on a strong sell. We see the CAC 40 futures in France on a strong sell. The DAX 30 in Germany as well on the strong sell. So, but even Eurostoxx 50 are set in a strong sell on all 4 time frames. Okay, everything is in red when it comes to indices, guys. Today, so there's your direction for today, at least according to investing.com. We have more news in the afternoon, guys. I have a surprise for you. We're going to have another Skype call. So join me at 4 o'clock. Let's see. We have some comments, guys. Right. Good morning to you, everyone. Good morning, everyone. So join me shortly after 4 o'clock, guys, to witness the U.S. markets opening together. Let's ring the bell for the first time this week, and let's see how the markets move today. Until then, remember to trade responsibly, and may all your trades be in the money.